Hey everyone, hope you're having a good day. My name's Andy. My channel is Finding Value. We're going to rip through Twitter. I'll share my opinions as we go. It's going to be mainly related to commodities, financial topics, and/or wealth building. I am going to cover, some people had some questions about what I offer on the website. I am going to cover that real quick at the beginning here, just to let you guys know what I do offer. I don't want to push this on anybody. Make your own decision. And it's really important if my investing style fits your investing style. I'm a buy and hold, ride it through the bull market type longer term investment style than get in and get out and trading based solely off the technicals. I try to combine all of it: fundamentals, technicals, and ratios. Those are the three. So let's dive in here. Let's take a look and see what people are sharing. If you want to follow me at Finance, and if you want to join our community, finding-value.com, you can use the word discount and coupon code if you want a discount. So this is where I'm going to go over real quick, put my plug in. Someone had asked, does anybody have subscriptions? And I was called out, so I just want to make sure that you guys know what I have. I focus a lot on the commodity sectors at this moment and not so much on the technology and S&P 500 companies, just because of the valuation differences. I cover dry bulk shipping, tankers, uranium, oil and gas, energy service, steel, iron ore, copper, aluminum, base metals, gold, silver, PGMs, platinum group metals, and more. I go and chart what people want me to chart. I'll chart it for them. I'll give you my opinion. I can't do anything one-on-one with anybody. I can just share what I'm doing. I share my portfolio. I share what I'm buying, when I'm buying, and I don't put how much I'm buying. I still keep that kind of, I don't want to just throw out numbers. I train people. We have a bunch of trainings on the website. Technical analysis, market conditions, and ratios is what I train on. And the market conditions is based off real estate cycles and yield curve inversion. I think you're choosing, I think if you do choose someone, choose to follow and learn from someone that has your same personality trait as an investor. So are you buy and hold? Are you trading in and out, shorter term time frame? Are you looking for dividend investments? I do a lot of dividend investments. I do a lot of buy and hold. I'm not a short term trader, and I would not recommend the website for people who are looking to do short term trading. You can learn how to do short term trading from the trainings, and you can venture off and do that. I just don't do that style because I found that investing and holding is where I yield bigger returns, less stress, and my returns have been far greater doing that, adopting that style. So again, my style is to identify bottoms and sectors, buy the bottoms, hold for the entire bull market, which includes some pretty nasty pullbacks sometimes, and sell at the top of the bull market. That's the goal. My returns over the last 5 years, and people were asking that, they've been 41% annualized. So my retire return over that period has been 4 to 5x of my entire portfolio in 5 years. I did very well buying the bottom in oil, gas, and uranium. We need another cycle to reset if you're going to try to make that type of return that quickly. But there's also still many sectors with companies that are still just blowing out that are offset from other sectors. So there's still very good opportunities out there right now. I also cover how I set up my portfolio allocation, position sizing, and how I obtained those returns above. Not everything will work, so try my best to find really blown out setups with positive technical analysis setups and fundamentals turning where returns can be very good. Sometimes I choose companies coming out of bottom patterns and buying them at the bottom or at the beginning of the run up, which a lot of companies are at right now in commodities. If you have any questions, feel free to reach out on here, and that includes anyone. And you guys can reach out too if you've got questions about the website that's listening. So Malcolm says a lot. It says, Malcolm, hypothetically, what would be the financial cost of 3 to 6 months shutdown and restart for a typical reactor? A lot. A 1,000 megawatt reactor will produce 24,000 megawatt hours of power each day, 24 times 1,000. At reasonable 60 megawatt per hour, that is a revenue loss of 1.44 million every day. So for 90 days, you lose 130 million, and for 180 days, you lose 260 million. It far outweighs the cost of the U308 if we go to some ridiculous level. They do not want to shut these things down. Coming on down, I may not agree with all of your outlooks, but it's glaringly obvious that corporations built on cheap debt can't survive extended periods of high yields. Corporate debt has ballooned, and the Russell 2000 is showing warning signs as yield climb. What systemic risk is possible if it continues? We could get a slowdown in the market of these businesses that survived off of low interest rates. Rates come on up, and then we got to cleanse the system of these companies. And that could come with some pain. So that is very much a possibility. And it's probably coming sometime around 2024, 2025. That's kind of where I think they might get cleansed out of the system. Some people think it might be a liquidity crisis, maybe not. Tough to say and tough to know exactly what that will look like. If the value's there, I take the value, I buy it, put it in the portfolio, and then I'm going to ride through the volatility and a potential pullback. The tough part is, when will the pullback occur, and at what level are you at before that pullback begins? If I'm up hundreds of percents on a company and it pulls back 50%, well, I mean, that's better to buy it now and hold it and hold it through it than it is to try to guess when the slowdown in the market is potentially going to come. But that's my viewpoint. That's basically what I've learned from Warren Buffett, Peter Lynch, and some of these long-term value investors. But the yield curve is inverted. It is uninverting. It's uninverting from a bear steepener, which means that the long end is going up faster than the short end. And that is a possibility. It is. Read this below, and then you will understand there's no upper limit on how far the uranium price can go. Dustin Garrow mentioned he overheard a nuclear fuel buyer say, if the price is $1,000, we will pay it. So that's the calculations below. And someone made a comment that if it's $1,000 a pound, people are coming up with some pretty high numbers now. And I talked about potential 5, 6, 7, 8, even over $1,000 a pound based off of ratios that we've seen compared against other assets. Now, where is it going to top out? I don't think anybody knows that. We can just do what we've seen in history, and I don't think that this market condition in uranium has been the same through history. I don't think we've ever had a supply problem with the intensity that we've got today. That's what I'll say there. The Federal Reserve making the rich richer since 1913. Top 0.1% earnings grew 15 times faster than bottom 90% earnings. A lot of people put themselves in the victim camp. They say, "Oh, well, I'm poor, I can't make it." Guys, that's not the attitude to have. If you want to make it in investing, you got to learn it. You got to get in there, save money, and compound it. Become part of, maybe not the 0.1%, but become part of the top 50% of the upper echelon. Strive to do it. No one is going to get there if they don't ever start and try. And what I've done is I've just continued to save as much as I can over all the years. And it's starting to pay dividends. Literally, it's starting to pay dividends. But my income's gone up a lot only because I'm investing in a lot of dividend companies, and they're paying out. And they increase and decrease based off the commodity that they sell. Moving on, Grady says it sure does look like Palladium is advancing now. Posted the chart below 2 months ago. Since then, it had a big breakout on big volume. Then a retest of the lows plus a backtest of the blue falling wedge. Looks like a major low is being carved out. Totally agree. Look at the volume. This is a falling wedge. It's coming on down. I think it's probably carving a bottom here. It's going to take time, guys. It's not going to be immediate. We're not just going to blow up to $3,000 an ounce. But I do think it's bottoming, and there's investments around this where you can hold on for this cycle. We've got the situation in the Red Sea is worsening. A Maersk ship carrying cargo for the U.S. Navy was forced to turn around due to attacks. Not even the ships man-marked in a convoy with the U.S. Navy can pass the strait outside of the Yemen safely currently. This is pretty severe. And We are converging towards zero non-Russian passings of container ships through the Suez. Our latest on ramifications. Look how low this is, guys. Thing passing through. Crazy. Yep, just uploaded midweek update. China licensed drivers one way up. Look at the drivers here from 2000 all the way to 2022. Massive increase in all vehicles and automobiles in China's licensed drivers. Rice Energy says investors are finally realizing that oil demand is healthy. Okay. And look at this, guys. Huge draws in oil and gasoline. It looks like we have a little bit of a move upward in gasoline, but big draws in crude, Cushing, and distillates. This is not talked about much, and why I like energy. If India and Africa continues to increase to just 4 barrels a day, which is the same level that China's at right now, oil demand would increase by 20 million barrels per day. USA is 21.8, Canada's 21.2. I remain bullish. And this is annual oil consumption. China's down here, and you can see India and some of these other guys down here. They're going to work their way up to try to consume more and more. The question I have is, how much can this world give in oil supply? I don't think we can go much over, I don't know, 110 or something like that. I don't know. The decline rates in shale, to overcome those decline rates, we're going to have to be finding like a Saudi Arabia worth of oil every single year to offset the declines on a worldwide basis. So we'll see. I really do like oil investments in some areas that can grow production. Nuclear power generation will hit an all-time high in 2025, says the IEA. Most of the new capacity will come online in China and India. Many countries recently put nuclear at the center of climate strategies, sparking a revival of global interest in nuclear energy. There's the forecast reaching all-time highs. That's good if you're a uranium investor. Here is U.S. liquefied natural gas capacity through 2027. Let's take a quick look at this. I can give you my opinions here. So we got 2022. We increased a little bit in 2022, pretty much flat for 2023. We had a new fortress floating here. And then in 2024, we see a big move higher. We go from 14.7 billion cubic feet in 2023 to 19.4 at year end of 2023. And we have a little bump in 25 and then massive moves in 26 all the way to 27. So we have a pretty big move in terms of capacity, LNG capacity that's coming online. And I think that they're probably going to try to block this, the governments, to some degree, because this is a function of inflation. And they might try to slow this thing down. It says Golden Pass. Golden Pass remains on track to start second quarter of 2024. Venture Global has received FERC approval to boost workforce to 6,000 people on a 24/7 basis to keep project on schedule for some of these. And these are high probability projects. So I think it looks pretty good for demand for natural gas, if this is what it looks like for LNG. Here's another one. It says, okay, these are already FERC approved. So this is the FERC approved ones. You can see how this goes up. 2024 Golden Pass. We've got this Black Mines going on up. Then we go into 2025 Golden Pass. I mean, this is a pretty steep move. And to me, we're going from 13 all the way to almost doubling the capacity, 12 billion cubic feet per day in 2024 onward. We're almost doubling the LNG export capacity. And there's a lot of people that are worried that we're not going to be able to produce that amount of natural gas, which is kind of scary. Sven says, we are now in the part of the cycle where everybody declares victory over inflation and people are supposed to be grateful for paying significantly higher prices versus 4 years ago and give thanks to the Fed for doing such a wonderful job. Here is the move higher in the consumer price index. You can see it's a very steep increase in 2020, 2021, and we're still increasing quite substantially. I don't think prices are coming back down for the majority of products. While Germany is deindustrializing, U.S. manufacturing construction is going through the roof. So spending has more than doubled in the past 12 months for construction in the United States. Maybe it has something to do with the war, perhaps. And it's pretty rare to have construction go up like this and get a recession because a lot of the employment is in construction. Yes, big moves in precious metals are surely coming. We are really just lucky bastards being here at this point in time, looking the right way, having the knowledge, knowing what to buy, seeing the future, and executing it well. It is going to blow both of your socks off, this big move in precious metals. Wow, it's wild. U.S. commercial petroleum inventories plummeted by a staggering 22.3 million barrels last week on cold weather chaos, the largest ever weekly stock draw. That's crazy. And you can see the different performances here. Gasoline's up a little bit, distillates are down, crude's down, and total petroleum's about 5-year average. Uranium prices have been aggressively moving higher. The massive supply deficit and price insensitivity from buyers should be a major tailwind this decade. Just notice how this goes up. It basically goes up and doesn't really have a pullback once it starts to move vertical. I don't know if that's going to be the same trajectory path going forward, but right now it's doing quite well. Think about uranium investors. It says 90% of uranium investors quit the trade right before they're about to hit it big, says Rick Rule. Probably true. Art Berman says we remain bullish on Canadian heavy oil sands stocks, 10 to 15% plus free cash flow yields at spot, strongest balance sheets in history, with debt rapidly falling further. So a long time coming, Trans Mountain pipeline expansions aims to be finished in the coming weeks. Yeah, this is right, guys. There's a lot of good investments up in Canada right now where they can grow production and they put this Trans Mountain pipeline to send it out. After historical breakdown, this chart is now backtesting for second time from below. And while the SPX just made new all-time highs, when the stock market cannot outperform inflation, global capital will need to move to commodities. I agree. We're coming up and doing a retest, and I think we're probably going to move on down. It's a 15-year bearish wedge, and rising wedges are bearish, and they generally end up lower. And that's the S&P versus the U.S. Producer Price Index. According to Rystad, as of yesterday's global jet fuel and gasoline and diesel demand, it was up 1.3 million barrels per day. Demand is not weak, U.S. shale is not surging, and OPEC cohesion remains strong, all leading to counter-seasonal global inventory draws. Yet sentiment remains terrible for now. And there we are up here in terms of demand. We're basically at almost all-time highs of demand for this week. Latest EAI comparative and inventory analysis for 124. Total commercial petroleum stocks are down 22. This is the lowest level dating back to May of 23. The fair value calculation for WTI is $78 or $3 undervalued from today's price, using commercial inventories in the data. This is a dot plot, and then he puts some lines on there of standard deviations around it. What does it mean to be rich in the United States? U.S. median net worth breakdown. And the upper class, I guess the U.S. median net worth for someone who's upper class is $805,000, $269 for upper middle class is 145, lower is 61, and lower class is 12,000. Do these numbers surprise you? I don't know if they really surprise me, but I don't know, guys. I mean, to be rich, I don't think that really matters. I think everybody is basically rich. We all, for the most part, live in homes that have heat, and it's really hard to jump and increase your standard of living from even any of these any of these socioeconomic classes here. An upper class person isn't going to live that much different than a middle class person. You're just going to drive different names on the cars, maybe. We're still going to have heated homes for the most part, still driving cars. It just, the names change. That's it. The chart is now showing the way to what's coming. Gold is a safe haven and copper is a base metal that does well in good economic conditions. See what happened during the 1970s. Coming move will dwarf the 70s by a mile. He's expecting gold to outperform copper. What I'm going to say is copper is going to start running deficits here in 2024. And he's right historically that copper is generally the economic metal, and we'll see how that all works. But in the short term, yeah, gold could easily outperform if the right market conditions come and the yield curve uninverts. But that's what I'll say there. Natural gas is gaining market share of electrical power generation. Could the shortfall of renewables and the potential uranium squeeze lead to a squeeze in natural gas? Weather has been warm for the past 2 years, leading to higher natural gas inventories, keeping price low. What if the weather changes? And this is the summer natural gas covered almost half of the United States electricity demand. And it's gone up quite dramatically. Its share of power mix rose from 40% to 45% for the summer months of July and August in 2023. And it says a confluence of factors, including a significant drop in the price of natural gas, coal plant retirements, low output from wind and hydropower, and high cooling demand in some regions caused the share of gas to increase. By contrast, the share of coal-fired generation declined from 23 to 17% over the same period. The record share of natural gas in the power mix continues the long-term trend toward gas caused by the shale revolution. It comes alongside federal and state level environmental policies that pose significant risks to coal in the United States power sector. What I'm going to say is to put so much weight on one sector, if we have any problems in natural gas production, the price of natural gas is really going to go up. If we get a shortfall, if there's cold weather. I know there's a lot of ifs, but that's what I think. And coming on down, all signs point to a freight market recovery. January 2024 bottomed in May of 2023. This is outbound tender reject index, and it continues to go up. And this is freight. That's generally, if you're moving more goods around the economy, that the economy is actually recovering. Maybe that's the case. Maybe that's why copper is going up and iron ore is going up and et cetera, et cetera. Hi, Andy. Okay, so that one I already answered last time. So we're going to end it there, guys. Give me a thumb up for the content. Subscribe to the channel if you haven't. If you want to check out the website, try it on out. If you don't like it, let me know, and I can refund you within 5 days of signing up. That's the policy. So if you have any questions, feel free to reach out. But that's what I've got. We'll catch you later. This is Finding Value.